So as we see a huge reversal from this morning's pretty dramatic declines, what's the play heading into the close and beyond? Joining me now, Jeff Sica, Squared CIO. Thank you so much for joining us. We also have Ashley Webster on the floor of the New York Stock Exchange. Jeff, talk to me. Goose, you've got more than $1 billion in assets. You were the guy who weeks ago said, I don't know, go in real estate before you go in stocks. You see bad things coming. Do you still?
Yeah, I mean, you look at where we're at. We're in the 7-year run off of this market. You have China imploding. China being the model of central bank intervention, government intervention, currency manipulation. You have all these questions, and investors are going to have to ask themselves, do they want to take the risk for the next step up? And my opinion is it's a big risk to take right now.
And you're worried about China, I would imagine.
Yeah, I mean, you know, because China is the model. Mm-hmm. We use a lot of those same governmental strategies to stimulate our economy. If they don't work there, there's a good chance we're going to have problems here as well.
I don't know why we're so upset about what they did. You know, we've done that in the past, but we don't devalue our currency on a dramatic basis like that. So we can't control them, but we can control where we invest. Right. What are you recommending right now?
Well, what I'm looking at right now is investors have to, first of all, realize that there is a case to be made for real assets. And I know the stock market has done well, and there's always an opportunity in the stock market if you're selective. But real assets, meaning real estate, I think the opportunity is still there.
Okay, I'm sorry. Can I buy a REIT? I'm not going to sit there and buy a piece of property. I mean, how do you do that as an investable suggestion?
Well, I think the REIT market is dangerous because the REIT market is the real estate investment trust market is a part of the stock market. I think it's important to look more. It's important to look more at the private equity real estate funds, the real estate funds that actually own hard assets rather than trade in the exchange.
I mean, you can look at the intraday charts of the Dow, the S&P, the NASDAQ today, and to see this clawback, to me, makes it look like stocks are resilient here. At least in the U.S., they're the best thing going. Why are you saying they're not?
Well, Liz, this is the script, and this is the script. The market plunges and then it surges, and then it plunges and it surges. Everybody's afraid of missing out. Everybody's afraid of missing the boat. So we get these dramatic run-ups. Plus, we always have a lot of short sellers jump in because there's a lot of people that anticipate this is going to continue. They jump in and short sell and realize that the buyers are still there, the momentum players are still there, and then these rallies are much more pronounced.
How will your play of real estate do under a slight rate hike if we see that by the end of this year?
I think it'll be limited because I think the bottom line is with real estate is you're able to lock in lower rates when rates are lower. There's a limited amount of supply. You could be very selective. There's not a constant, you're not constantly inundated with supply as we are in the stock market. Liquidity is always an issue with real estate, but I think real estate is going to hold up because a lot of these countries that are worried about China, Europe, that are thinking that our market is overvalued. A lot of these sovereign wealth funds, they're buying real estate. They want the hard assets. They want stability.
Jeff Sica, a big football fan, I might add.
Yes, a big Giants fan.
A big Giants fan. Yes. So you think Brady?
Yeah, I mean, it's bad. I'm biased. I can't say anything. But the worse it gets for Brady, the better it's going to be for Giants fans like me.
We'll take it. Jeff Sica of Squared. Thank you so much.
Thank you.
Great to see you.